Well, get this, get your handkerchief ready. Life is tough on Wall Street so far this year if you're in the trading business. But before you shed any tears, let's hear from WSJ's Sabira Chowdhury about what is going on. Thank you very much for being here, Sabira.
Absolutely.
The trading business. What exactly is the trading business? What are we talking about there?
We're talking about fixed income trading, so that's bond trading, and we're also talking
buying
about
and selling of bonds.
Buying and selling of bonds, and then we're talking about stock trading. Bond trading is the one that's been creating all the issues for the last quite a few quarters now. It's looking like this quarter will be the 14th quarter of the past 18 where fixed income trading will be down for the industry. Much of that has to do with the fact that volume and volatility have both kind of been slumping across the board. Barclays actually just released its first quarter earnings today, and they said their fixed income was down 41%.
And the volatility is good because when there's moving, the prices are moving up and down, the spreads can be a little bit wider, and they can make a lot more money that way.
There's more trades to be made as well. Yeah.
Okay. Now on the equity side, which is what a lot of people think about, is that also doing bad news stuff?
That's a lot more resilient. It seems to be bond trading that's having kind of the major slump, and it's not just something that people think is kind of cyclical and is necessarily going to pick up. There's been a lot of talk at the big banks about how this might actually be a secular decline, that it's a shrinking pie, that it's a business that banks
and secular. That's as opposed to cyclical. Cyclical is with the business cycle. Secular is a long-term trend. And
so regulation,
like the move from horses to cars.
Exactly.
And this is the move from big trading volumes to small trading volumes, and we hear from JP Morgan, they're saying that their markets business revenue would drop about 20% in the second quarter.
Yeah.
Ouch.
That's something. In the first quarter they had 15% that they had said. It actually ended up being a 17% drop, so it's kind of in line with what they've been seeing in recent quarters. Analysts are saying it's too soon to tell whether other banks are going to face something similar, but it definitely looks like fixed income is going to be down across the board for all.
Now what I know, and we've also got Goldman Sachs is
who's very heavily dependent on fixed income, more than any other the other big U.S. banks.
So what I know about, and I've worked in Wall Street institutions, is that as soon as the revenue goes, they just fire people. They basically just like get out the scissors and start cutting the umbilical cords, and people hit the street.
We've done a few stories on how bonuses on Wall Street have been hit specifically for traders because of this fixed income slump. None of the banks have yet come out recently and said that they're slashing people, but Barclays again is a European bank that expected to say a lot about what it's doing with its investment banking division, so that should be interesting.
Okay, well we shall see. I wouldn't be surprised if we do see some cutting there. Bad news on Wall Street on the trading front. Thank you very much, Sabira Chowdhury.